So you probably studied ICT for the longest time, but you still find it difficult to spot high probability trading setup. Or even when you do, you eventually get wicked out or you eventually miss out on the trade entirely. So in today's video, I'm going to be removing a lot of those confusions that you have in finding, spotting, and actually taking this high probability trading setup using the ICT concept or trading model. So you want to catch high probability trading setup. There are just four things you want to really pay attention to. Number one is time. If you've been studying the ICT concept for the longest time, you know one key element in ICT concept is time. Time first before price. The second thing you want to focus on is liquidity. You want to understand where are the areas of liquidity, where's the draw of liquidity, or which liquidity has actually been taken out. The third thing you want to actually pay attention to is a displacement in price. This is very, very, very important because this tells you the direction where the market makers, the institutions are willing to move price next, or where they are willing to take price from. So displacement in price can't be overemphasized. And the last but not the least you want to be looking out for is market structure shifts. So with this already outlined, let's look into the chart. So here on the GBP USD, this is actually a trade we caught today. A trade we caught today right here. We caught all the way to the buy side. So for those of you that don't understand what the ICT silver bullet is, actually a strategy based on time. Actually, it's a strategy based on time. So all you want to be focused on using the ICT silver bullet is you want to focus on the 3 o'clock to 4 o'clock New York time. So if you use the Trading View platform, if I go to Trading View platform right here, you can see we have almost the same setup right here. So this is 3 o'clock candle here, and this is the 4 o'clock candle. So you want to pay attention to this 1 hour time zone. So let's go back to the previous chart. Right here, we want to pay attention to this particular zone, which is that first 1 hour. So if you're using the MT4 platform, it's going to be 10 o'clock chart time to 11 o'clock chart time. But if you are from trading from London session, you'll be looking at 8 o'clock to 9 o'clock in the morning. So that within just that 1 hour Q zone is what you're going to be really focused on. So the next thing you want to be looking out for on the 1 hour, mind you, the time frame we're using here is the 1 hour. What you need to focus on is the liquidity run. You want to pay attention to liquidity run. Mind you, I told you there are three things you want to pay attention, four things rather you want to pay attention to. Number one, you want to pay attention to time. Now we just put time in place, which is within the ICT queue zone, which is 10 o'clock chart time to 11 o'clock chart time if you're using the MT4, 3 o'clock to 4 o'clock New York time. But I want you to really focus more on using the New York time, which is 3 o'clock to 4 o'clock, because we can have shifts in daylight savings. So you want to use that exact New York time, which is the 3 o'clock to 4 o'clock, and transpose it to any chart you're using at any given time. So you want to focus on using the 3 o'clock to 4 o'clock. Within that 1 hour zone is what you want to be really focused on. So within that zone, either before it or within that particular zone, you want to see a liquidity run. And right here on this particular chart right here, if I zoom in properly for those of you that want to see it clearly, you can see that right here on exactly 10 o'clock chart time, which is 3 o'clock New York time, we had a liquidity run below this particular low right here. We had a liquidity run right there. So now that's the second thing you want to pay attention to. Mind you, I said the first thing is time. The second thing is what you want to see, a liquidity run. Now the next thing you want to pay attention to is a displacement in price. Now this where you drop down to the lower time frame, and for the lower time frame we're using the 5 minutes. So you drop down to the lower time frame. The next thing you want to pay attention to and you want to see is a displacement in price. So you can see still following the analysis right here, you can see the moment we drop into that particular liquidity run, which is this red line right here, we can see that price displaced to the buy side. So you can see the displacement. This is the displacement right here from this particular low to this particular high right here. So that's a displacement. So now let me zoom that in properly and explain something real quick. So here falls in as a displacement. This whole move to the buy side falls as a displacement because it took out this particular high right here. Now if you measure this particular high to this particular low right here, this particular move to the buy side is actually 1.5x or 2x of this particular structure range that was broken. That is why here qualifies as a displacement in price. So you want to see this displacement in price happen, and at this particular time also you want to also be working on the hourly chart. And this is something I do. This is a particular secret I use to be able to confirm if the displacement is actually worth it. I actually focus on the hourly chart. So at the time of the hourly chart, at the time the hourly chart was forming, if you look right here, we are seeing somewhat like a bullish order block forming right here. So before this particular candle closed, I could see the momentum in price, and I knew that before this particular candle was going to close, we're going to have a bullish order block form right here. So you see, it's a multi-time frame analysis. So building the idea and consolidating it together, just right on that specific time zone. So back to the 5 minutes, we can see after the displacement in price, the next thing we're waiting for is just a minimum retracement. So you can use either a Fibonacci to be able to time your entry. You can draw this down here, and you want to focus on the 50% level or the 61%, 61.8% level. So which any one of them, it doesn't really count, but you just want to be able to get that optimum entry in price. So once you're able to see price give you a retracement either to the 61.8 or the 50.0, whichever one our price actually gets to first, then what you're looking for is you're looking to get in on price. You're going to be framing your risk to what with a minimum of 1 to 2. So let's say you enter on the 61.8 at that level there. You entered on this 61.8, you put your stops below that low at 146 pips using the MT4 platform, and you're aiming for this particular high, which will give you over 1 to 2 risk to reward, which is about 300 plus pips right there. So you risk 1%, which is 142 pips or 14 pips, and you are aiming for 30 pips, which is 322 pips using the MT4 platform right there. So with that out of the way, we can see how just blending this whole concept was able to help us arrive at that, just using a draw on liquidity, time, displacement, and market structure sheets. So I also want to put something in this video before I actually end it. Probably some of us on the particular server we're using didn't see that particular liquidity run, because probably the server we're using didn't really show the liquidity run. Like on this particular server, we could see that the liquidity run was very, very, very obvious. So let's say you are using a platform, because I actually have two platforms I use. So let's say you're using this particular platform right here. So this is one of my brokers that I actually use, and right here you can see that if I zoom this other one on this side, you can see on this particular chart here, we have a swing low right here. This is a spread based on this broker. So this the gap in price right there, but this particular broker didn't actually give us that gap in price. So they actually mitigated that particular gap in price. So but this particular broker on that end right here, they actually showed that gap in price right there, and that helped us see our liquidity run within the kill zone. So what are you going to do in a situation like this? What are you going to do in a situation like this? So what you want to pay attention to, mind I told you there are only four components you need. Number one is time. Number two is liquidity. Number three is a displacement in price. And number four is a market structure sheet. So the same concepts still apply even if the broker does not show you every single details there. So you can look before this particular time, which is still the same time. We're not changing the time. 3 o'clock New York time to 4 o'clock New York time, within that hour zone. On your MT4 is going to be 10 o'clock to 11 o'clock chart time. So we saw a displacement in price. You can see this bullish run to the buy side, and all of a sudden after that we started seeing price was retrace. So we saw within this particular zone, we are focused on this particular zone, but long before this zone, we can see that there was a displacement in price. So two is checked out of our box. Now the next thing we're going to focus on is an area of liquidity. Right here we can see this series of down close candle, the structure that was broken by this displacement in price. We can see these are series of down close candle. This serves as order block. Now this acts as our area of liquidity. This is an area of liquidity where price is going to reach for to gather more orders. So you see, we're still building the idea based on the four concepts that we started with earlier. And the last of all you want to pay attention to is the market structure shift. And now for you to see that, all you need to do is drop down to the 5 minutes, and boom, you can see it right here. You can see that we have a market structure shift, the same entry. You can see how price expanded with a displacement right here, giving us what, a market structure shift above this particular high, after price has tanked into this particular order block right here on this particular line right there. You can see we had what, a displacement in price. So either way, whether you're using this particular server or you're using the other server, you would still be able to catch this particular bullish run on pounds within this ICT silver bullets kill zone. So if you find value in today's video, hit the like button, the subscribe button, and if you want to see more content like this, also leave your thoughts in the comment section and I'll be sure to get right to you there. If you have any other questions, also leave it right there, or maybe there's some areas of the ICT concept you want me to actually touch on and actually bring out concepts and strategies like this, you can also leave that thoughts in the comment section. Until next time, see you in more videos.